Welcome to StockMarketFunding.com. We're welcome all of our international viewers. We welcome all of our viewers in every class of the market. And what do I mean by that? Hedge fund managers, well, you need to pay attention because we're going to be going through the quarterly earnings. And if you're watching, well, we're going to be taking this Google trade. And there was some headline news on Google that came out, but most importantly is that Monday is going to be the kickoff date, Monday, October 15th. You're going to have that Citigroup before the opening bell that's going to set some of the tone. We already know what JP Morgan said on Friday. Another bellwether in this group is everyone's going to have all their eyes once again on the Goldman Sachs earnings and where they're doing. Johnson & Johnson's another key driver. These are all for the big mutual fund community and people that manage lots of money. They go into these things for dividend yields and various different structures in the marketplace, where SMF is more of a market maker in the names during the earnings, taking the most money out of the movements. So all eyes are going to be on that Johnson & Johnson. Forest Labs, we'll be watching that. But the biggest one here that we trade, Chipotle Mexican Grill. That's the one that we shorted last quarter. Oh, yes, we did. And the live videos are on Stock Market Funding. That paid big. And not only that, I'll be happy to show you that Chipotle Mexican Grill closed at $290, up $4. But we traded this thing and shorted it last quarterly earnings, and it fell like a rock. And all that money was made. Then it went up off of the bottom, and we took it up to 351, 350, and we got out. And it was time to get on the other side. That was the end of the move. There's a big hedge fund manager that is short Chipotle Mexican Grill. It had a $29 intraday drop. When that announcement was made, there's been a lot of headline volatility in equities. There's going to be a big bang of it when we start these quarterly earnings out. Chipotle Mexican Grill will be looking at the long side and the short side. Then we get into a lot of IBM. All eyes IBM, all eyes CSX. We know what the transports have been doing. They've been lagging the rally. A lot of them have guided the quarter down. Earnings aren't going to be good. So what? But the people that weren't involved in the rally over the summertime, is that bull that's sitting on the sideline going to want to come in? Yes, he will. So it's going to be a very volatile earnings season. Intel's been downgraded again. Semis are always weak for a while. Weaker economy. Listen, Bank of New York will be coming out. That's going to be a big one. All of these trades are extremely huge. Northern Trust, we're watching those because we're looking at where that bull has to have two things. He's got to have financials, and he's got to have the housing market. Housing stocks, the builders, home builders, already ran 150% off of their bottoms. They're top end heavy going into the earnings. Stay away from them. But once again, a new bull cannot be born without that housing economy finally putting its lows in and keeping interest rates at all-time historical low levels will push people back into equities. You want to trade the quality for the investment community out there? Good luck to you. If you want some training on how to do it, we do have programs for you. We do. eBay, MMT, eBay. That one there is, what is the rollout? We've been long this thing, last couple of earnings reports, and it's all about that PayPal and the kind of revenue that it puts in there and how eBay has changed its models around. So basically, another one that we're going to be watching and looking at is the casino, Mr. Wynn. What's he doing? We already know that a lot of these other earnings that are in here are very important pieces of the economy, like Steel Dynamics. And listen, the commodities plays and the steels and the copper, things like that, and silver, they've had their ranges, but the slower growth in China, people haven't got onto that one yet, but it's always how you buy anticipation as far as those kinds of trades go. One of the other things that we're going to be watching that's going to be very important in here is anything to do in the semiconductor chain, anything to do in the software chain, and various different components within the broader sector indices. Small cap companies are very important, and we'll be doing a special segment on small cap again with our MMTs and our apprenticeship division. Verizon, well, listen, we're not doing anything with that, but this is what the big money does. They go in here, they look at the dividend yields and this and that, so be it. We make a lot more than that. CMG, like I said. The other thing that I just want to tell people, that CMG trade is going to be a big one this time around. We've seen what Yum Brands had to do. They bucked the trend and they went up. SanDisk in the memory flash. All right? But the biggest one of all, Google. And it's going to be on Thursday. So when we go through all of these various sectors, which we do well, is that we like the higher beta earnings and the higher beta intraday movements. Capital One, we're all over that too. Believe me. And the thing about it is that a lot of them are going to guide the quarter down. We've had, for the very first time since 2009 lows, since we've leveraged up in the earnings processes, is at the fourth quarter right here with the current slowdown worldwide. Even though you got all the stimuluses in the world, they're making, in some areas, less money. The last quarter, they marked the earnings down a lot. So it's going to be a mixed bag as to some were marked down and some haven't marked down. CEO community and every one of these earnings and every one of these public traded companies, SMF developed a CEO barometer. Their conference calls are not going to be extremely robust like they have been in all the other prior quarters since the financial lows there back in '09 when earnings leveraged up and we got to the bottom of the trough level. Yes, the professional community have different models. Those are all retail public models. Our models are not based on that. We'll be watching that U.S. Bank Corp in there. So as we go through the first heavy load of the earnings, our focuses are going to be on what they have to say, but that doesn't mean that we trade them all. No, we only trade the ones that count, that are going to pay us. And I will go through some of the IBM calls and put strategies. There is a way to trade earnings season, and earnings season has a way that equities can go up in anticipation and then they drop like a rock in after hours. There's lots of volatility in earnings. There's ways that we will teach you how to protect the risk in these publicly traded companies in our MMT structure. In the after hours process, we'll be buying equities off the lows or selling short on the highs. We'll get that earnings price volatility that you can literally make a fortune in. And I am happy to present that the election is coming soon and that the headline volatility in Google and Apple have been running. The price ranges have been getting much greater in value intraday. 1077 was your range here, $10 here. The other day, this Apple had a headline that with the antitrust case, and it went barreling down to the lows again to 625. It traded up. Our first pass was to 647. Then a headline came out and traded it down. On Friday, antitrust case rumors started circulating on Google, and Google went from $10 all the way down here, and the put options paid big. So there is a lot of volatility that you people are going to experience in these earnings season. We know how to trade them because we've been doing it our whole life, and we know the manipulations, and we know what the media can do, and we know that people can come out with lots of variances and rumors that can create price volatility on an intraday level. So once again, welcome to the earnings season. I will be telling people right here that the Dow has had a major reversal from its bull run highs. That 1425 on the S&P is holding. I will be happy to pull up that daily chart, and I will throw the S&P 500 in here because it's important for you to understand that when Mario said when we were shorting that we were going up to 1475, we had a reversal. We came up. We tested it. Now, what Mario is telling all his traders, market makers, is this: that double top, everything, there's your bull top reversal. You pull back to that 50-day moving average here on that daily, on that S&P. If you crack that and sell that thing down, and we get volatility, that means that this S&P can drop down to this 1404 level. Let's not forget about the 1416 area, about 1415 area. But when you break through that 50-day simple moving average, is how does it exasperate the reversal, the bull reversal, meaning that the bull has been strong for the summer rally as it has. And we're going into earnings. That's there. Now, when you take a look at the Dow, it too sits on the 50-day simple moving average going into these quarterly earnings. Be aware. When you take a look at the Nasdaq Comp, well, you're already selling down below that 50-day simple moving average. And here's the 100-day and the 200-day, and all of this is on standard technical analysis. Not so much how we make our decisions, but how the public does. And you broke it right there on the Nasdaq 100 going into the earnings. And I'll just show them here relative to this report kicking off that earnings. You can see right here that we're below that 50-day and the 10 days crossing over. And not only that, on this Nasdaq 100, you have what we call a daily sell signal. And the next support level down here on this is right at that 100-day. And then ultimately, 2639 down here at the 200-day. And that heavy related tech stocks that disappoint or have to guide down could cause this Nasdaq 100 to come down and hit support levels. Just remember, every bull does have its reversal. And as we work through these calendar fourth quarter earnings and the election, what is going to be the most important thing is where they get on sale and where that bull will come off of that sideline and start trading again, because their money has to get put to work. And it's not going to be a great picture. We've told everyone this for several months. So what? Here it is. It's starting. And I can tell you right now, I just threw the indexes in here so that you people know exactly where the indexes are. You know exactly where all of them are in this live video and how they're going to be traded. But most importantly is that on the daily charts, that bull, when you get the reversal and you start breaking down, it's those lower levels where that money on the sideline, irrespectively of bad news in the equity earnings, will try to come back into the market and find where those would be on sale. Because Mr. Bernanke made it clear, Federal Reserve, you want to keep money on the sideline? I'll make it miserable for you. You want to get a higher asset class of returns? You'll have to go in and put risk on in equities if you want to make money. He made it clear to all the fund managers. He made it clear to the U.S. He made it clear to all of our other partners around the world that from their monetary base of what they're going to do and what those other 17 countries have got to do with the Europe and the Chinese and everyone else involved, that the U.S. set the tone. He said it. Now the rest of the central bankers and policy makers are going to follow the same suit. The old saying is, don't fight the Fed. Don't fight a worldwide Fed either. But when these earnings come down, and if we get into a growth contraction, we haven't had a negative earnings quarter in a long time. And it's very possible in the shorter time frame that we can go into a negative earnings growth. That's why they call that fiscal cliff and all of this and all of that. Who cares about it? What you care about is that you get the best of the breed, that they're on sale, that they're a leader in the sector, and that will teach you how to make markets during the earnings season. Once again, it's a Saturday. It's 10:22 a.m. It's 10/13/2012. And we're happy to close this video out going into their earnings, where the S&P 500 is. If I were you and you think you're going to be in this market, I would get with us before you get taken.